couple things to start out. First off, I don't think most people understand what's going on right now. I don't think they understand the context or the implications of what happened yesterday. I'm going to sort of spend some time going through that. The other thing I want to make crystal clear is that there are important laws, both federal and at the state level, against basically inciting a bank run. It's a criminal act, so we're certainly not going to do anything like that. But let's talk about Silicon Valley a little bit here. So the implications are several. First implication is, for regulators, and this is going to be a whole kettle of fish now for the Fed, because again, I want to be careful what I say. I don't want to, get crazy here, but if Silicon Valley has difficulty funding this capital raise that they're trying to do, and deposit outflow requests go up and are unable to be met, then there's going to have to be something that happens here, because obviously deposit insurance is $250,000. That doesn't cover a lot when you're, an institution. This is going to happen pretty quickly. Either they're going to solve this probably today, or we're going to go into the weekend and something needs to happen, I think, because there is a real crisis of confidence going on right now. It's going to be a total dilemma, I think, for the Federal Reserve if they have to step in here, because, Powell is a week and change away from presumably tightening another 50 basis points. And he could have, one of the 20 largest banks in the US on the precipice of, real problems here. FDIC obviously is going to be tremendously involved, most likely as well, if they can't get this deal done. The other knock-on effect here is that there are other banks that were down very significantly yesterday. This was not isolated to Silicon Valley. So First Republic Bank was down a lot. PacWest was down a lot. A number of banks were down a lot. Even, Schwab was down, I think, 15% yesterday. So people are clearly concerned. And part of the dynamic is that with today's sort of digital age, you can move deposits around to get better yields in almost no time whatsoever. But the point is that, banks have been awash in deposits for so long that they've been reluctant to take rates up. And now all of a sudden, you're seeing this sort of deposit flight risk manifest first, on the margin where it's the greatest risk, which is, sophisticated VC and PE depositors at Silicon Valley basically saying, either I want my money or I want a better yield on my money. But this can easily propagate out beyond to just sort of average investors. And, the best case scenario is that banks basically rapidly elevate their deposit betas. They pay up for deposits. They take the net interest income hit to do that, but they stabilize their funding mix. The sort of more concerning scenario is that they don't. And they see deposit flight, and you end up in this same scenario because a lot of banks are carrying similar marks. And so, so either way, the outcome is not great, to put it mildly. Banks are already getting nervous. We know that from the senior loan officer opinion surveys for the last 3 quarters in a row have been getting tighter with respect to willingness to lend, just general perception of credit conditions. This dynamic at Silicon Valley is sending shockwaves, I guarantee you, across every bank in America right now. They are tuned into this thing like a hawk, and they are basically convening emergency ALCO sessions, asset liability committee management sessions right now to talk about this situation, what's going on, obviously how to try and mitigate any similar risk. But part of what's going to happen here is that underwriting standards, I think, are going to tighten even further. So obviously, this is going to put tremendous pressure prospectively on the Fed from a policy standpoint. So anyway, there's a lot going on here. I don't think most people who are not bank analysts or financial analysts really have an understanding of the severity. I mean, you have the 16th largest bank in the country lose 75% of its equity valuation in a day and a half. I mean, that is incredible. That's like an '08 type event.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.